So, we're diving into Bitcoin options today. It's like the market's sending some signals that the probability of Bitcoin hitting $200,000 by December is under 3%.
Definitely intriguing. Right. And despite the aggressive bullish chatter, it seems the real numbers don't quite back up a full blown 72% rally expectation.
Exactly. It's kind of like um, traders are setting up these far out of the money options, but really they're more about sculpting their risk rather than fully betting on a surge.
Yep, that's true. And the data? Call options open interest is around $6.45 billion compared to only $2.36 billion in put options, correct?
Yeah, that's right. Those call positions, even with strikes at $170,000 and above, are structured for leveraged upside while keeping the downside risk
Yeah,
controlled.
interesting approach. I find it fascinating that the maximum potential loss in one of these structures, like in the call diagonal spread, is just a fraction of a Bitcoin with gains targeted only if BTC exceeds, say, around $146,000 by October's end.
It's like you're paying a little premium for what is essentially a cushion, a built in risk management tool. But I have to ask, don't you think that even with these bullish strategies, the market sentiment might be misinterpreted when you see headlines screaming about $200,000?
Right, indeed. Yeah, I mean, sometimes the headlines and the real probabilities just don't line up. The Black Skull's computations, for instance, peg the $140,000 call at a 21% chance, but the $200,000 call sits at a mere 3% chance.
And that's where you see the nuance, right? These calls are used strategically to design portfolios, not necessarily to predict a 70% rally.
Exactly. Speaking of strategy, the inverse call butterfly setup is another clever one, buying a $140,000 call, selling two $160,000 calls, and buying a $200,000 call for December expiry. It profits mostly if Bitcoin sticks near $160,000, but then it caps the losses if Bitcoin races too far above that.
Yeah, it's like they're hedging their bets. But here's something interesting. While options traders have these aggressive setups, Polymarket actually gives a 13% chance for Bitcoin to reach $200,000 by year end.
I see what you mean. That kind of divergence raises a valid point, doesn't it? How do we reconcile a 3% chance from the options pricing with a 13% probability from another source?
Absolutely, and that's where the interpretation gets tricky. It might be that the options strategies are more about cementing a calculated risk reward balance instead of a true vote of confidence on a historic rally.
Yeah, that's a fair point. And then there's the interesting play with put options. Nearly $900 million dollars placed on Bitcoin falling between $50,000 and $80,000, which shows that bearish sentiments are also comfortably active in the market.
Right, so overall, the market isn't necessarily in a consensus for a massive surge. It's more like parties hedging their positions with these call and put spreads.
Indeed. It really emphasizes the complexity of options trading, using these instruments as tools rather than simple predictions, wouldn't you say?
Exactly. It's like, building a safety net while still shooting for the stars, but with a very realistic take on what's likely to happen.
Absolutely, no rocket science here, just smart hedging. Well put. It definitely gives us a more sober view of market sentiment amidst some headline grabbing numbers.
For sure. It's a reminder that while aggressive strategies grab attention, the underlying probabilities paint a more cautious, well calculated picture.
Right on, really food for thought.